But with this, let's move on and let's put the spotlight on Kalpataru Projects, because that company did come out with a stellar set of earnings. But what's the way forward? Let's understand from Mr. Amit Uplenchwar, who is joining us on the show right now. Hi Amit, great to be speaking with you, and firstly congratulations on a good set of numbers in Q4. Help us understand, Amit, what actually led to this particular growth and what are you expecting from FY26? What sort of a top line growth can we pencil in?
Well, thank you very much for having me. And yes, as you mentioned, we are very, very pleased as management to have, reported our highest ever revenue, PBT, EBITDA, and, the PBT as well for Q4 FY25. And as you mentioned, this was a combination of several things. Since our merger 2 years ago, our unit values have gone up substantially from where they were 3 years ago. Our order book sits at almost close to 65,000 crores, which is an all-time high for us. We've expanded now to over 75 countries, giving us geographical, diversification across the world and in various continents. And even across sectors, we've gone up, in data centers, in underground metros, we've gone in HVDC, complex transmission networks and substations. In buildings and factories, we're doing airports, we're doing all kinds of high-rises, complex commercial residential buildings. And that is giving us that depth and focus to be able to deliver these numbers in Q4, and hopefully the trend will continue in the year to come.
Great. Thanks, Amit, for all those insights, and congratulations on that great set of numbers. This is Kanishka also joining in. I also want to understand from you, while your other segments have performed very well, water has not been doing as well. So do you expect any kind of improvement going forward in FY26?
So we are cautious, and we are obviously hoping that things will get sorted out now that the elections are over, budgets are done. Allocations have been given to water segment, which are significant. So I see only things picking up from here for the water. I think the last year's events are behind us. Good thing is that we are diversified across several sectors, and in spite of all these issues that sometimes come up in sectors which are beyond an organization, we've still managed to deliver very, very good numbers and kept most of our guidance intact. And I think in going forward for the next year, we are quite happy to, say that we are very, very confident that in spite of challenges that we may face for the next 2 years in maybe quarter 2, quarter 3, we are still happy to give a 20% growth guidance both on standalone and a consolidated basis for our business for FY26.
Amit, also give us some sense on the margin figure as well, because what we have seen is that back in around 2021, you were actually holding margins in double digit, which has now come down to 7.6%, and it's been a bit stagnant. Give us some sense that going ahead, since your outlook is overall positive, do you believe that margins can also improve, and any indicative range that you can help us with?
Of course. I mean, if you look at those numbers from when you were, the years that you mentioned, we were primarily looking at large transmission business where, the capex profile is very different from where we are today. We are well diversified, and that's why for us, what is more relevant also for all of you to track is to look at our PBT, right, which is a more realistic number, because let's say urban infra, we have now 6 TBMs, which is one of the highest fleets in the country for underground metro, as against none that we had in the same year 4 years ago, right? So if you look at our absolute numbers, we have grown by 30% on a standalone basis, in terms of EBITDA, and also in terms of 16-17% on a full year basis last year. And I think we had said that we'll grow between 4.5 to 5% in terms of PBT in FY25, and we did just that. We want to increase our margin profile going forward for FY26. And I think we are confident and working very hard towards achieving, 5.25 to 5.5% of PBT on a standalone basis, and close to 4.5 to 4.75 on a consol basis. And that is a significant margin improvement from last year. And I think we are quite confident that we should be able to get to those numbers. Given the strength of our balance sheet, some of the lowest debt levels that we are on, if you look at all our financial ratios and metrics, they're the best that we've ever had in several years. And thanks to the synergies of our merger playing out, our scale per unit, our average project size, which used to be close to 200, 220 crores 4 or 5 years ago, has gone up inching close to 500 crores and going upwards. And I think that gives us the ability to optimize on projects and giving us that scale where we can, focus on margins.
All right, Amit, like you were talking about the scale of your projects, I want to understand your order book as well. So going forward, could you help us understand what kind of order inflows you are expecting and which are the segments where we could see orders coming in FY26?
So FY26, we are looking at, again, a 26 to 28,000 crores of order booking for FY26, giving us, again, a good visibility of 2.5 to 3 years of revenue forward. And we are quite comfortable with that in our business. Given the fact that T&D and B&F are on a huge upswing, and I think this trend is going to continue for the next 2 to 4 years, given the fact that the energy mix is evolving towards renewable, HVDC technology is now becoming mainstay because long distances where power is being transported. Airports are having a huge resurgence. You've seen a large order that we bagged again last year in the Northeast from Airport Authority. Going forward, we've got even internationally several airport projects, large data centers that we are bidding for. We are also looking to expand our water business overseas. And if, we are qualified in several geographies, we hopefully will convert some of those into order wins this year. Let's see whether it's Q2, Q3 that pans out. We are also looking at underground metros and elevated corridors, tunnels that are, growing. So FY26 looks to be a good year across all our sectors from an order booking perspective. And as I mentioned, 26 to 28,000 crores is what we are looking at to book in the year ahead.
Touched upon the data center. I just wanted to have your take. You were highlighting the fact that you are bidding aggressively for these particular tenders with respect to the data center. But how big an opportunity lies ahead? What sort of an order win are you already penciling in and looking forward to? And also, if you can give us some sense on the margin profile for this particular segment, any indications that how does the financial matrix stand out for the data center?
So whilst the data center opportunity might be very large, right? But even for us, even if we get 1 or 2 decent sized projects, that works well for our B&F business. While the margin profile for the data center business isn't dramatically very different from our conventional B&F projects, but what works for us that it gives us a very high ROCE because the capital expenditure on these projects is practically zero. And order sizes, given the fact that we do large data centers, our unit size would be anywhere between 500 to 700 crores per project. So let's see. I would not like to give a number today for what would be the quantum of data center wins, but clearly it's an advantage for us when you look at a blended B&F, it fares really well for the company.
All right, but if you can just give us some sense that what sort of an order wins are you penciling in? Is it coming in from the private players? Any MNC that is coming out with such tenders? Any more indication is what we were wanting. If at all, you can share some numbers there, Amit.
Most certainly. So if you look at our building and factory segment, majority of that has been in the private sector coming from the southern part of India. These are very large private developers, most of them being listed, and hence, very, very stable credit profiles. We've been working with them now for over 20 to 30 years, and a large part, 65 to 70% of our business in the B&F comes from the private sector. We've been a little slow in the northern market, which primarily was historically a government order-led business in building and factories. However, that trend seems to have reversed with some of the northern developers also coming out with extremely large projects. You would have seen a project that was launched in Gurgaon of a very famous personality without naming, and that project was sold within 24 hours, realizing a revenue potential of over 3,000 crores. These kind of things didn't happen. So whilst BNF looks robust in the south. Now the same has started happening in the northern part of the country. And I think 65 to 70% of that will come from the private sector is our sense, at least for the next 12 to 24 months.
All right. Thank you, Amit, for that input. But lastly, I would also want to understand what kind of share are you seeing in the international markets? What's your outlook there going forward? What kind of demand are you seeing in the export markets?
So if you look at our international markets, starting from LATAM, we've opened Guyana as a country, Suriname, we are present in Colombia. Because of our subsidiary in Brazil, we have a significant presence in Latin America today, probably the only Indian contractor to have such a large-scale presence there. And over the years, Latin America has been a little soft, but going forward, there is a huge number of projects that are lined up for the next 8 to 10 years, and competition there being reasonable, and hence it gives us the ability to get a part of that action. If you look at our subsidiary in Sweden, I mean, we've literally gone up with 60-70% in terms of order book, our revenue. Swedish market is expanding in huge HVDC lines because most of them are either dated or energy mix is changing. So again, from a transmission perspective, LATAM, our European subsidiary, African markets and Middle East look very, very promising with tens and billions of projects planned in the pipeline. Our oil and gas, given the fact that last 4 or 5 years we spent a lot of effort in building technology platforms, building teams, building skills, capability, management bandwidth, we look at and our qualification with all national and international oil companies in the region. We are expecting oil and gas, which is also seeing a huge upswing in the downstream and midstream market, for us to get a part of that action. Similarly, water, there are several projects that we are looking in international markets, and we are qualified across geographies and clients. So that is also looking good for us. And of course, airports, data centers, and all of your urban infrastructure, all are on an upswing internationally as well. So we don't see projects or number of billions out there already announced. Let's see what we get out of it, which is profitable and in line with our corporate guidelines of how we want to take projects.
All right, and we wish you all the best for that, Amit, and really appreciate you taking the time out today and speaking with us and giving us a sense that where's the company headed. But for this, viewers, let's move on and let's put the